Okay, freeze that. That's a freelancer's bank account in March. Not because they didn't work hard, not because they're bad with money. It's because nobody ever taught them the four things that actually matter: taxes, budgeting, the slow months, and the thing almost every freelancer ignores until it's way too late: retirement. I'm going to give you the exact system, not vague advice, the actual math, the actual accounts, the actual percentages. Stick around for the third one. It's the mistake that costs freelancers thousands of dollars every single year, and almost nobody talks about it. Let's go. Here's the first mistake. You get paid, the full amount hits your account, and your brain says, "Great, that's mine." It's not. As a freelancer, you're not just paying income tax, you're paying self-employment tax too. That's Social Security and Medicare, the stuff an employer usually splits with you. Except now, you are the employer. So the rule is simple. The second money lands, 25 to 30% of it doesn't belong to you. Open a separate savings account. Call it something annoying like IRS Hands Off. Every payment that comes in, you move that chunk immediately, not at tax time, immediately. And here's the part most new freelancers don't know. You don't pay once a year, you pay quarterly, 4 deadlines. Miss them and the IRS charges you a penalty for underpaying, even if you pay it all eventually. Mark those 4 dates, set phone reminders. This isn't optional homework. It's the plumbing that keeps the whole system from flooding. Second problem, budgeting apps are built for people with a steady paycheck. You don't have one of those. You have a heartbeat monitor. So forget budgeting off your income. Budget off your average. Take your last 6 months of earnings, add it up, divide by 6. That number, that's your salary. That's what you're allowed to spend on your life every month, not what you made in your best month, not what you made in your worst. Anything you earn above that average in a good month, it doesn't go toward a new expense. It goes into a buffer account. Because next month is not guaranteed to look like this month. This one shift, budgeting off your average instead of your best month, is the difference between feast or famine and actual stability. Now here's the one nobody warns you about, the slow month. It's not a maybe, it's a when. Clients disappear, projects get delayed, summer goes quiet, January goes quiet. It happens to every single freelancer, no matter how good you are. This is why that buffer account from part 2 isn't optional. It's your insurance policy. The goal is 3 to 6 months of your average expenses sitting untouched just for this exact scenario. And I want to be blunt with you for a second. The freelancers who panic and spiral in slow months are almost always the ones with zero buffer, the ones who built it. They treat a slow month like weather, annoying, temporary, not a crisis. And now, the one I promised you, the expensive mistake. Nobody's automatically doing this for you. No employer 401k, no automatic match. No HR department reminding you every November. If you don't set it up yourself, it simply does not happen. You've got 2 solid options. A solo 401k, if you have no employees, lets you contribute as both the employee and the employer, so the limits are actually huge. Or a SEP IRA, simpler to set up, still lets you save a serious chunk, tax deferred. Here's the number that should bother you a little. If you wait 10 years to start because you're not making enough yet, you're not just missing 10 years of contributions, you're missing 10 years of compound growth on those contributions. That's the actual cost. It's not the money you didn't save, it's the money that money would have made. You don't need to max it out on month 1, you need to open the account and start. Even a small automatic monthly transfer beats a perfect plan you never start. So that's the system. Set aside the tax chunk the moment money lands, budget off your average, not your best month, build the buffer before you need it, and open that retirement account even if it's small right now. None of this is complicated. It's just stuff nobody sits freelancers down and explains. If this helped you make sense of your own money, stick around. I break down one piece of the freelance finance puzzle like this every week. No pressure, just here when you need it.